In December 2025, Anthropic's annualized revenue was $9 billion. 7 months later, $65 billion. That is a sevenfold increase in 7 months. By the end of this video you will understand exactly how that happened, what the IPO looks like, who the real winners are, and the honest risks that almost nobody is covering alongside the headline number. First, what Anthropic actually is. Because not everyone watching this has heard of it. Anthropic is the company that builds Claude, the AI assistant used by millions of people and tens of thousands of businesses worldwide. It was founded in 2021 by Dario Amodei and Daniela Amodei, who both previously worked at OpenAI, along with several colleagues who left to build an AI lab with a specific focus on safety. If you have used Claude.ai, you have used Anthropic's product. If your company uses an AI that helps with customer service, legal analysis, or code review, there is a meaningful probability it is Claude. Now the revenue timeline. Because the growth rate is the actual story. End of 2025, $9 billion annualized. February 2026, $14 billion. March 2026, $19 billion. April 2026, $30 billion. May 2026, $47 billion. End of July 2026, $65 billion, an $18 billion jump in just the last 2 months alone. That is not a straight line. That is an acceleration. The monthly additions have been getting larger, not smaller, as the company scales. Anthropic's actual reported revenue for the second quarter of 2026 came in at more than $11.5 billion, up from $4.7 billion in Q1. Ahead of its Series H fundraising round in May, Anthropic told investors it projected its first-ever operating profit for that quarter, $559 million. The company has since confirmed positive adjusted operating income for the quarter, consistent with that projection. 2 honest caveats on that profit number. It was shared with investors specifically in the context of a fundraise, a setting where companies typically present their most favorable forward-looking numbers, not an audited public filing. And some analysts have pointed out the figure may be temporarily flattered by a ramp-up discount on Anthropic's compute deal with SpaceX. Worth knowing before you treat one profitable-looking quarter as proof of a durable business model. For context, Anthropic's full-year 2025 revenue run rate ended at approximately $9 billion. The reported Q2 2026 quarter alone was more than $11 billion. Rival OpenAI, for comparison, has also grown sharply over the same period. Both companies' numbers are staggering. But Anthropic's growth rate has been faster, and by the latest reports, its current run rate has pulled ahead of OpenAI's. Investors expect Anthropic to finish 2026 between $100 billion and $120 billion in annualized revenue. If that projection holds, it will represent more than a tenfold increase in 1 year. Now the IPO. Anthropic filed confidential IPO paperwork with the SEC on June 1, 2026. The filing was at a $965 billion private valuation, set when the company closed a $65 billion Series H round in May. The IPO target, $2 trillion or more, according to people familiar with investor expectations. That would represent approximately a 2.1 times step up from the Series H valuation in a matter of months. The expected timeline, the public S-1 filing during summer or early fall 2026. Institutional roadshow and pricing to follow. A target listing on the Nasdaq around October 2026, though no firm date has been confirmed. If Anthropic achieves a $2 trillion valuation at IPO, that would make it the largest technology IPO in history. Anthropic at $2 trillion would land alongside the largest technology companies on Earth, despite being founded only 5 years ago. Now who the hidden winners are. Because this is the detail most coverage is missing. Amazon. Anthropic has committed $100 billion to Amazon Cloud Services over 10 years, with access to up to 5 gigawatts of capacity running on Amazon's own Trainium chips. As Anthropic's revenue grows, its cloud spending grows. Amazon is being paid $100 billion over the next decade by one of its most valuable investment holdings. SpaceX. Anthropic pays SpaceX approximately $1.25 billion per month, for compute running on more than 300,000 NVIDIA chips, through a contract running to May 2029, reportedly worth north of $40 billion in total. That works out to roughly $15 billion a year. Elon Musk's company is receiving $15 billion a year from Anthropic for the compute that trains Claude. The AI race is simultaneously making Anthropic's investors wealthy, and writing enormous checks to Amazon and SpaceX. Now the honest risks. The $2 trillion valuation implies a revenue multiple of roughly 30 times the current $65 billion run rate. For a company only just reporting its first profitable-looking quarter, using investor-facing projections, not audited results, that multiple requires sustained high growth and a genuinely durable path to profitability at scale, not just one favorable quarter presented during a fundraise. The cost structure is extraordinary. Anthropic pays $1.25 billion per month to SpaceX alone. Model training costs hundreds of millions per run. The infrastructure required to serve $65 billion in annualized revenue at AI scale is unlike any previous software company. Gross margins at this scale are not yet publicly documented with sufficient detail to confirm the long-term profitability thesis. Competition is intensifying on multiple fronts simultaneously. OpenAI remains a formidable rival. Google's Gemini has a massive user base. Meta's open-source models reduce switching costs for enterprise customers. A company that is the fastest-growing AI lab in history is also operating in the most competitive market in technology history. And some of Anthropic's earliest backers, the ones who got in back at a $4 billion valuation in 2023, are reportedly skipping the current round entirely, waiting for the IPO instead. That is notable. Investors who have the most detailed view of Anthropic's financials and operations are choosing to wait rather than invest at $965 billion. That is not a red flag on its own. It is a data point worth acknowledging. What a $2 trillion Anthropic means for the industry. This would be the first time a frontier AI lab has been valued by public markets. Not by private investors with concentrated positions and high risk tolerance. By institutional investors, pension funds, index funds, retail investors, who price assets against comparable companies and require profitability pathways. The public market pricing of Anthropic will set the benchmark for every other AI company. If Anthropic achieves $2 trillion, the implied valuation of every other frontier lab adjusts upward. If Anthropic prices significantly below $2 trillion, the private valuations of every other frontier lab face pressure. This IPO is not just about Anthropic. It is the first public referendum on whether frontier AI is worth what the private markets have said it is worth. Subscribe for daily AI coverage. One question in the comments: at a $2 trillion valuation, would you invest in Anthropic at IPO? Tell me yes, no, or wait and why. I read every comment.